Oh, hello everyone. It's Susie again from Esoteric Trading Solutions. Sorry if I keep clearing my throat today. I've got a really sore throat. But again, I couldn't help myself. I had to look at the ICO Spectra, and I honestly cannot believe, like, I've read 4 different accounts of, people saying buy Spectra. And seriously, it's just incredible. And I'm very negative Spectra. As you know, I worked in financial markets for 30 years. I worked in foreign exchange, equity markets, commodity markets, fixed interest. I've been fund manager, all sorts of things. And I'm very, very familiar with the foreign exchange market. And I'm very, very familiar with retail foreign exchange platforms and, equity market platforms and CFD platforms, which are cash for difference platforms, equity, share commodity platforms and fixed interest and the like. And honestly, I've got to say that I just think Spectra's out there to go through the ICO market to get 30 million US, because they know that if they went through the equity market or the debt market or the banks, they wouldn't get the money because legislation hasn't come in yet, and they're just trying to sell you something, that's honestly, they could just white label. They could literally use someone else's technology, put their own name on it and white label it. And the question is, why are they coming to the ICO market to get $30 million out of you guys? To me, they just want to put it in their pocket. It's just ridiculous. I mean, I should do this. I should bring out an ICO and basically say I'm going to bring out an FX, trading system with no brokers. You can do that already. There's nothing, competitive advantage in what they're doing at all. You can white label someone's, infrastructure and someone's technology already and have no brokers. You know what I'm saying? And it's not going to cost you $30 million US to do it. I mean, it just seems to me that I could go out there and white label something and call it, Susie's, financial markets model with no brokers, exotic CFD trading, out of the British Virgin Isles. I could set up in the Bahamas somewhere and get $30 million from the ICO market, and I won't go to jail. I won't go anywhere. It's just, I'm just going to live happily ever after with a lot of money. I'm just amazed at some of the views out there. It just shows me that people don't know anything. They know absolutely jack shit. So let's go back to Spectra, and I'm sorry, but the more I read of this stuff, the more I just want to scream, because, I've read probably other analysts out there and they're saying 6.5 or 7 out of 10. They've got to be literally on drugs, seriously. Anyway, they're trying to get $30 million. They want to bring a platform in foreign exchange, exotics, and CFD trading with no brokers. There's nothing new about that. You can get that anywhere. CFDs, if people don't know, they're cash for difference products. They're like, basically futures products, but they're margined. So basically, if you take on a position, often you take on a very large position you don't realize you're doing. When the market comes down, you got to keep putting cash in to your account because you're on margin. You're trading with leverage, a lot of leverage. Leverage works against you when the market goes down. If you don't have the cash, you get absolutely closed out at the bottom and you get hammered. Most people that trade CFDs or cash for difference contracts, foreign exchange and exotics, 95% or 99% of retail traders lose their money. On average, they've done stats on this. 99% lose their money, and most client accounts lose about 250,000 Australian dollars, which is about 220,000 US dollars. That's a lot of money. Anyway, coming back to this structure, they want to come to the market. They want to get 15 million pre-sale, and they're offering a 33% bonus. Whoopie-doo. They want to have everything closed and done, by the 5th of November for another 15 million US, 30 million. Thank you very much. Gee, I tell you, I should come to the market and do this stuff, seriously, but I'm too honest. Anyway, they basically want to get their pre-sales done, and anything else they don't sell, they're going to burn the coins. Fine. Pretty much, and they want it against Ethereum. Now, Ethereum's currently valued at 305 US. And they're going to have 2,000 coins. You're either going to go on the Spec D or the Spec C. And according to my calculations, you're going to pay probably 15 cents per coin, if that's right. For a business, it's it's a demo model, like a gaming demo model, and then it's going to take them up to 3 years to come up with something real, which there's already stuff in the market like that. There's many different trading systems in the market. Australia is one of the most over-financed, over-banking countries in the world, and there are many trading systems to trade. CFDs, exotics, and foreign exchange with no brokers. So there's nothing new in this at all. The fact that you're going to pay 15 cents US for something that's not even set up is just a joke, even though they're supposedly using Ethereum decentralized technology, and everyone goes, oh, Ripple's not centralized, but it's got a business, it's making $15 billion a year, and yet people are bullish this piece of crap. I can't believe it. Ripple's at 20 cents traded, and they've got 15 billion in the bank. They've got the Bank of England as a client, they've got the Federal Reserve as a client, and people are bullish to this when there's systems out there, many, many systems out there that have their own, technology, fast technology. I've been working in the market, as I said, since 87, before people were born. That just is incredible. You don't need to use Ethereum technology just because it's decentralized. They're trying to fit a business to the technology, and it's not needed. The financial markets, have the most advanced technology in the world, okay, except settlements, right? In terms of trading systems, they have the most advanced technology in the world. And the reality is, Ethereum wouldn't be able to handle, the transactions that financial markets requires when you're trading on the front office desk, buying and selling currency or anything else. Ethereum could probably only handle 6 to 7 transactions if you're lucky in 2 or 3 minutes. Another problem with Ethereum technology is the hashing rate. If you've looked at it recently, miners are very up and down with Ethereum. The hashing rate is not going through, or it's not being consistent. It's quite volatile, depending on whether, they get paid for the transactions or not. So it is a real problem at the moment with miners, because miners are dominating, as we know, Bitcoin, the miners are dominating the transactions. There's only a small select group of miners that are actually dominating the processing of transactions with, their hashing and with what they get paid. And again, when you think about it, if that's not centralization, I don't know what is. Seriously. Okay, going back to this thing, 250 million tokens, they get burnt if they don't sell them, big deal. It's expensive. Look out the website. They're actually in British Virgin Islands. They're under British law, but still, the ICO market is not regulated. So these guys can come to the market, get their $30 million and say, right, we're going to work on this thing for the next 3 years, when they can go and get a white label product from anyone. They can go to CMC and get a white label product, from Saxo Bank and get a white label product, from IG Markets get a white label product. What I mean by white label product is they use someone else's technology, put their own name on it, and basically say, here, clients, here's the product. They don't need to build a new product. This is a joke. Sorry, but I'm really frustrated. And I don't really want to have to keep coming to the market like this and saying to you guys why I'm so frustrated, because, it just drives me crazy. I have a great service, and it's not expensive. If you subscribe to it, it's not expensive, because it's actually going to save you a lot of money. Seriously, this stuff just sends me wild when I read this stuff. Okay, so the project aims is to create a blockchain technology, in terms of financial products. Big deal. They have a guaranteed liquidity fund, you'll say, and, which is, you say that's great, because they can always make markets on the buy side and the sell side for a client, even if there's no natural buyer. Well, I've got to say something to you. I worked in the stock market crash of 87, and I worked in the stock market crash of 2008. I worked in the credit crisis of 2007. I worked in the Korean crisis in 1999. And when markets are imploding and when markets are coming down, no one can guarantee liquidity. The reality is, if they have a balance sheet like the Federal Reserve that had liquidity, then no one can guarantee liquidity, and they can't utilise a liquidity pool when markets are going down 80 to 100% and all hell is breaking loose. They're not going to be able to provide a two-way market. That's just bullshit, absolute bullshit, and it's lying. So, they can never guarantee liquidity, because when markets seize up, in the stock market crash of 87, there was no liquidity. In 2008, when the market was shocking, there was no liquidity, because when things are going down, everyone is looking to sell, and everyone pulls their buys. Everyone. and that's not liquidity. Basically what happens is the market's at 20 or 200, everyone pulls their bids, and all of a sudden the market falls down to 100. And that's not a liquid market. And you can't tell me this little shop is going to say, hey, we stand in place of a falling market. Because you know what? The reality is, if they're showing a bid offer, a buy-sell, when the market's going down like nuts, someone's going to come along and throw a big parcel at them, and they're just going to get absolutely hammered. Anyway, coming back to this, if you buy the utility tokens, they're going to offer you 1 to 5% payout ratio on trading, and gosh, if you get in trouble financially, they're going to buy those tokens back at a 3% fee. So they're basically encouraging people to trade, to churn, which is what they want you to do, because they'll make money out of it once they get this once they get their system in place. After the first quarter of 2018, they've only got a prototype released. If you read the white paper saying they're going to take 3 years, that's a long time when financial market systems are already in place with no brokers. And then they say they're going to pay you a dividend on the Spec D, 2%. Big deal. Yes, their white paper is quite extensive, but you know something? The financial markets industry is the most regulated industry in the world, one of the most. It's the toughest in terms of regulation, know your client, in terms of anti-money laundering, in terms of legality, in terms of compliance. They need to have a very extensive white paper, because to get through the regulators, to be able to do what they're doing, which I don't reckon they will get through the regulators, they need compliance. They need to know where the money's coming from, that it's not drug money, that it's not coming from China or from prostitution or whatever. And I don't know how they'll get through the regulators, to be quite honest with you. So I do think, and the more I read this, I think it's a bit of a scam, actually, because I could just come along and say I'm going to do this, and you can give me 30 million US, and that'd be lovely. They don't have any competitive advantage through it. They have no unique product. The market is full of companies with these products, full of it. Blockchain, they have no real blockchain talent in terms of the team, and blockchain is not appropriate for this industry, the financial markets industry. It might be on the settlement side, but not on the front office side, I can tell you right now. They have really no safe custody of clients' funds when all hell breaks loose. They've got a liquidity pool, but they're saying that liquidity pool, is going to invest in the market, and that's going to be subjected to financial market risk too. And the reality is, liquidity pool, if it's supposed to be security, whatever, it should be invested in risk-free assets. Just like the stockbroking fund here in Australia. There's a National Guaranteed Fund. It's like a $180 million fund here. It has to be invested in risk-free assets, which means treasury notes or cash. Again, margins. When clients are investing in CFDs, that moves against them quite quickly, and, they can lose quite a lot of money. So, who's going to spot that? Spectre will just close those clients out pretty quickly. Also, with no brokers, the clients don't get any help. I know I was reading something on the internet. One of the investors said, they tried to ask the CEO a couple of questions, and their CEO literally said pretty rudely, F whatever. And I thought, gee whiz, the guy hasn't even got his money yet, and he's telling him where to go. That's pretty amazing. That's all I can say. You can read the rest of this, but it just frustrates me, because I just think, there's so many negatives. It's not funny. Again, okay, so you can read the rest of it. I want to keep it under 15 minutes, but conclusions. No competitive advantage. It's a highly competitive industry, financial markets. There's trading portals everywhere for the retail client, and you don't have to talk to brokers. Most clients lose their money, get churned and burned. 250,000 is what most clients lose. How do they get their client base? It's nothing about how they compete in one of the most competitive industries in the world. The industry is harsh in terms of regulation, know your own client, anti-laundering regulation, financial services regulation, advisory regulation, you name it. Why didn't they white label someone else's product? The technology is there already. Ethereum's too slow. It doesn't suit the business model at all, full stop. It's encouraging clients who overtrade and churn and burn, and then it's encouraging them to gamble. But also, if you do run it out of Ethereum or money, we'll always buy back your Ethereum at 3%. No, thank you very much. No criteria for payouts, all very vague. No criteria for bonuses. Basically, no safe security of their liquidity fund. They can't offer liquidity in times of absolute volatility. It's just crap. Contract for differences are the worst things that traders can trade because they're seriously risky. When markets go down, the margin, the leverage actually works against you quite negatively, quite badly. And there's nothing about how they themselves manage financial risk and their fund and how they manage that risk either. So on that note, I'm very negative and I wouldn't invest in this. But I can't tell you guys what to do. If you think it's worth, investing in, for a pump to get it in and out, good on you. But I wouldn't put a cent in it. That's my personal opinion. It's my opinion only, but you guys make up your own mind. Cheers.